Yes, boys, so back again with another trading video. Did manage to get a trade in on Friday, was a very successful one. So I will show you the trade now and what happened. Obviously been off the markets a little bit because of all the volatility going on with the tariffs and stuff and the Trump announcements. For me, it wasn't the right time to use my funded accounts, but I did sense an opportunity in the market and I did take it. So I'll take you through the trade now. Okay then, so here we are onto the daily. As you can see quite clearly, we had this monthly fair value gap there, which we reacted off very nicely. For that reason, we had a huge reaction. You can probably expect that we're going to have a day or two where there's not as much movement as such compared to this massive up move there. If you go on the 4-hour chart, you can see we retraced into this 4-hour fair value gap. So I was looking for a reaction off here up until these highs here, but we obviously didn't get that. However, what we did have is we had two big wicks there, which uses liquidity. So this is an area of liquidity in the market, internal liquidity, which the market will look to target. And because we've previously taken this high here and this liquidity up there, you can probably imagine we want to take some sort of sell side liquidity first before we do go up to the higher targets. Into the 50-minute, you can quite clearly see that we were very much within a range here. So what we're looking for price to break to either side of it to give me that move to the opposite side. With that in mind, like I said, there were areas of liquidity you can see here that I feel like the market would want to target first before moving to these high targets up there. Therefore, when I took the trade, I was looking for the short. The key things to look for when we're in the ranges: will the market dip above or below midnight price, and also do we have an opening range gap? Quite clearly see the market here from the open. It wasn't a massive opening range gap, but it was enough to give us a general direction of order flow at that time. So with that in mind, you can see here price, it was struggling at that moment in time with the opening range gap. Price was struggling to take these highs up there. It gave several attempts trying to push up, but it ultimately dragged back into this open range gap. Therefore, it can give you the indication that price will want to target these lows. So when price is often consolidating in a region and it hasn't taken out either side of the London high or low, it will go to one before reverting to the other. So because of my time of execution being early on during the silver bullet, I was looking for that short because at that very moment in time, price was gravitating to this open range gap after failing to use it as support to come to these highs. So therefore the target is obviously these lows. And also, like I said, it wanted to dip further beneath the midnight opening price there. So what did I do? I was looking for price to show that displacement leg. So we obviously had news at 10 o'clock, so we had that initial displacement down. However, you wait after news, had another failure swing up. So we've had two failure swings after taking out this high there. So this is your short-term high, this is your short-term high, that's your intermediate-term high, which will stay protected. Therefore, I can look to frame my entry when we get that breaking structure. So obviously, we had this inversion fair value gap here, pass through, dip back up, and then we had this fair value gap there. So this was the first sign of order flow to be bearish for me because we filled the whole of the imbalance and then we've rejected lower. And then as soon as we had this breaking structure here with this short-term swing high, then I can enter on this order block. So that is what I did. So I entered on this order block there, and then I obviously targeted these lows down there, the London range lows, as that was my target point, and then put my stop above this candle high. So 2.8 3-ish ratio, which was pretty good. And then obviously once that happened there and we took these lows, that is now the protected low, put in the short-term low here, and then we did eventually move to the high of the range. And that is basically how you trade within these consolidation areas, right? So you need to wait for the opposite move first, but I knew that the draw was here just because of the failure to break above this open range gap and take these highs. I knew that price would want to come and take these lows first. That is what I did. Therefore, I capitalized on the short move first before price eventually went up. However, like I was saying, the safest option for me in that day was to wait until we did take out these lows there. But obviously that didn't happen during my time of execution, which was when I wanted to enter after the news, because that's where the volatility is in the market and you can get that quick distribution. But yeah, that's the end of the video. Like I say, very nice trade, very decent. Managed to make nearly 200 on 3 Topstep accounts, so accounted for $600 total, which is pretty good. Definitely good progress, and yeah, very decent profit. So I'll catch you in the next one.